Hello everybody and welcome to the 7th episode of Mortgages Made Easy. This one focusing on buy-to-lets. Just a quick thank you as usual for liking, sharing the videos and also the positive feedback I've had off people. Absolutely brilliant. Thank you again. So this episode 7 is a continuation of episode 6, which was buy-to-let basics. So when I set out to do episode 7, I was looking to provide you with specific examples of buy-to-let mortgages and how they work. But as I've researched into how I could present it to you in line with Mortgages Made Easy, I've come to the conclusion that I cannot make it easy. There's too many variables with regards to buy-to-let mortgages. With regards to criteria, and also everybody's situation is different. So in my mind, I think I failed a little bit, so I'm a bit gutted, but the best way that I thought I could sort of share with you what I was looking at, so then you get a bit more knowledge around buy-to-lets, would be to write down my sort of thoughts on what was going to go into the video and then tell you about them. And then from those points, you can then deduce why it was too complicated to try and make it easy. If you see me reading, I have written some points down because this is quite complicated and I just didn't want to be all blasé about it. So I've written a few points down. So if you see me looking up, I am looking up and reading. Simple as that. I don't want to trust myself to forget anything. So as I said, very complicated. Each individual case is different and literally all of the lender's criteria is different as well. So let's have a quick look at some of the lenders. So I'll just tell you about some of the lender's criteria. So affordability wise, some lenders have a minimum income requirement, say 20 grand, 25 grand. Some lenders don't have any income requirement at all. Some lenders will lend to you on your overall income and affordability. Some lenders will go on the income cover ratio, which is the ratio of rent towards in relation to the mortgage payment. Some companies will top slice. Now that means that they'll take in some of your overall income and slice that away from, say, your wages and put that towards the affordability of the buy-to-let. There's different rates for different level of taxpayers, basic rate, higher rate. There's different stress rates for, there's different stress rates for HMOs. There's different stress rates for portfolio landlords. What is a portfolio landlord? In most cases, four properties constitutes a portfolio landlord. Then its criteria changes again if you've got a limited company, a special purpose vehicle, which you set up to buy the buy-to-lets through the limited company rather than hold them on your own. I know a lot of people are switching to that at the moment, especially with the stamp duty. Minimum age, some have a minimum age, some take on first-time landlords, some don't. Some take landlords who don't have their own residential property, some don't. So as you can see, it was just a bit of a minefield out there, and to try and condense all that down and then to make it easy and to present it to you, I was just coming up against a brick wall. So the advice here is, if you're thinking of buy-to-lets, then go to your mortgage broker, because I've tried to look at different examples over the internet, all the popular ones, to give me some direction on how to present this. And the information on the internet is accurate, but it's not anywhere near as in-depth as you're going to need, and it's all generic, and obviously you're not generic, you're an individual. So therefore you need individual advice from a broker. Otherwise this will pretty much drive you insane, I would have thought. So just go to a broker. I'm a bit reluctant to do this, but I will give you some examples, 2 examples, right? And this is just to give you an idea. There's a lot of criteria behind this. So anyway, well, I will give them to you. So I'm going to read this. Purchase price 120,000. Deposit 25% is 30k. You'd have a mortgage of 90,000. With the mortgage works, there's no minimum income. Goes on the income ratio, income to rent ratio, right? Income cover ratio. Crikey, sorry, apologies. You can tell I don't really want to, anyway. Income cover ratio. So if you're a basic rate taxpayer, then the rent that you would have to show or prove to get that 90 grand mortgage would be £422. However, if you were a higher rate taxpayer, you have a different stress test, and then you'd have to show that it was £490. So you can see the variances there. So keep those two figures in mind, 422, 490. So as if the house is worth 120, you're going to get about 550, 600 for it anyway. If you went interest only with the mortgage works, so one of the lowest products, lowest interest rate products, your interest only payment on 20 years would be £119.25. But there's loads of, that is just, not picking figures out the air, but that's just to give you an example. There's loads of stuff behind that. I just thought I'd give you some examples of, that's interest only. As I described last week, you just pay the interest off and another repayment. Whoever payment is 438, but there is fees on that mortgage product. So, bit of a weird one from me, because I've given you information about buy-to-lets, but I'm telling you to go to a mortgage broker, which I am, so obviously come to me, but please go and take advice, because there's, apart from the buy-to-let basics, which I suggest you go and watch before you go and do anything, all these other things come into play, and they'll, like I said, they'll just confuse you. So I've tried to be as honest as I can, just with myself and you, because I didn't know what else to do. So that's all from me, from one of the strangest videos I've ever done, let alone Mortgages Made Easy. The credit report link will be in the comments. DM me for appointments. Please share, please like, and I hope to be working with some of you in the future. Thanks again, and speak soon.